You've seen the historic runs of companies that end up on Reddit's Wall Street Bets, or Elon Musk's Twitter. You've seen them rally day after day, but fall just as fast. Maybe you were tempted yourself, but didn't want to endure the record highs, and especially not the record lows. Well, we found a company whose potential is only outmatched by its reliability. Hello, judges and fellow investors. My name is Shivam Suri,
And my name is Utej Manav.
and we are research analysts from Central Peel Secondary School, here today to pitch Salesforce.com, ticker symbol CRM. We recommend logging Salesforce, the software CRM company, which currently trades at $205.68 as of March 25th, because it's undervalued by a calculated 23.4%. The market has incorrectly overemphasized the tech sector's decline, and there's significantly more upside to the recent Slack acquisition than priced in. They've also beat out the S&P 500 over the last year, thus showing strong and investable growth. We also see increased growth over the pandemic and beyond, which has created exposure for the importance of online customer and business relations.
Now, what is Salesforce? Salesforce is the world's #1 customer relationship management or CRM platform. They produce cloud-based applications for managing sales, service, marketing, and much more. Some key LTM financials include $21.3 billion in revenues and $3.3 billion in EBITDA. This translates to LTM multiples of 46.7 PE and 8.9 PS. A breakdown of their most recent quarter, ended January 31st this year, they had total revenues of $5.82 billion, up 20% year over year, of which 94% was attributed to subscription and support, and another 6% to professional services. We believe there's an underestimated potential of the digital transformation spend. Analysts forecast a slight revenue decline this year, but the global digital transformation spend is expected to reach an inflection point. Now, before we move on with the presentation, let's take a closer look at one of Salesforce's best-selling software, Sales. The Sales Cloud is an all-in-one cloud-based application that allows sales teams to effectively manage their cycles, prioritize tasks, access smart insights, and deepen customer relationships. It includes tools for contact management, sales forecasting, and managing leads. It's a #1 fully customizable platform to grow digital sales.
The CRM industry is rapidly expanding as it's experiencing a large boost from the pandemic. At the helm of this growth is Salesforce, whose great financials and services have kept them at the top. CRMs have a very wide variety of applications that can be used to digitally transform any type of business, whether it deals with customers or internal controls. For companies using a mobile CRM, 65% are reaching their sales quotas, while only 22% of companies using non-mobile CRM have reached the same targets. The reach of mobile CRMs have also dramatically increased. The mobile CRM business will reach $15 billion worldwide by 2021. By 2025, this market is expected to reach $80 billion in revenue, representing a 10.3% CAGR. This increase is driven by the fact that 47% of businesses are planning to increase spending on help desk and customer service software, while 60.7% of businesses will be investing more into the digital marketer's wallet in 2021. That's an estimated $600 million.
For our first thesis, we're covering Salesforce's high switching costs and locked-in factor. First, the gateway. They have a compelling value proposition for typical IT enterprises. The most popular application, Sales, hooks clients by reducing physical assets and migrating data to the cloud. This addresses the most immediate pain point for customers. Next, they're given the cross-sell opportunity because they can then use data collection to deepen customer relationships, thus increasing switching costs. The company has effectively turned sales expertise into customer reliance on other products. In fact, single cloud customers increased their average number of subscriptions 2.1 times from 1.8 to 3.6 in the last 4 years. And at the end game, there isn't one because each cross-sell strengthens customer integration into the robust ecosystem. The platform's stickiness increases with each reliable product. And this is proven by the company's highly consistent CAGR for TAM growth across all their cloud offerings in the Customer 360 suite. For the second thesis, we're covering the accretive acquisition strategy. Since 1999, Salesforce has employed an acquisition strategy to build a rounded suite of products. Key purchases such as Demandware and Quip have now become applications known as commerce and productivity, respectively. Their acquisitions allow them to service a large variety of customer needs. For example, the purchase of Tableau in 2019, straying from the cloud-focused mission to support businesses with legacy infrastructure. In addition to their CRM cloud applications, Salesforce now provides a holistic solution to access insights from all types of systems. And the Slack acquisition closing in the second quarter of this year is a rather recent purchase. Projections indicated $4 billion revenue mark by fiscal year 2026, or a 38% four-year CAGR. This pushes total 2026 revenue targets to $40 billion, culminating to a 19% four-year CAGR across the entire suite. And this, as we can see, this move presents very high hopes following Slack's integration into the suite. Now for Salesforce's competitive positioning. For brand, Salesforce boasts a reputation for creating applications to help businesses grow, and innovation has kept the company at the forefront since 1999. They also benefit from customer stickiness because CRM can cross-sell customers subscribed to any application within their suite. Salesforce sees the advantage of an economy of scale. Being a dominant competitor allows them to increase their velocity of sales while reducing scaling and customer acquisition costs. Our Porter's Five Forces analysis also indicates that Salesforce is way ahead of the competition because their one-stop shop operations keep customers using similar services from the same provider for reasons including security and low fees. And we've also located opportunities for Salesforce to grow their revenues. First, their product portfolio has rapidly expanding TAMs. They predict rapid adoption of their business products, most notably sales, with a predicted 11% four-year CAGR. And this culminates to a $175 billion TAM for the whole suite within 5 years. Next, their companies prefer adoption of the full suite of their products because multi-cloud subscriptions represent 93% of their annual recurring revenue in fiscal year 21 or last year. And this indicates a preference for the full ecosystem. Thus, the Customer 360 suite represents a strong value proposition. And lastly, their international expansion potential, because Salesforce is over-indexed to certain regions with 66% of their ARR from North America alone. They've also under-penetrated in Europe and hold a negligible share of APAC and Africa.
Salesforce is expected to see some major growth due to its direct catalyst. Some catalysts to suggest this growth is their upcoming merger with Slack, which will give them a larger asset portfolio as well as a larger customer base, their year-end earnings, which projects a 21% increase in 2021, and 3, the expansion of Sales Cloud 360, which is a way for businesses to use artificial intelligence to compare yearly data that may have been skewed from something such as, say, a global pandemic. Now let's delve deeper into the finances. Their gross profit margin is well above industry norm, holding at least 62.27% for the last 1.5 years. They also have enough cash on hand to sustain themselves for a full year, which is twice the recommended time, a mere 6 months. They've also steadily increased EPS 4.7 times since 2019 and have a 36% asset turnover. This asset turnover ratio, paired with their 28% quarterly growth in assets, suggests that future revenue is to come. We believe that the valuation of Salesforce will greatly increase over the next 12 months as per financial data accurate to March 25th, 2021. Our bear case sees an increase of 17.2%, our base case 23.4%, and our bull case sees an increase of 29.9%. These estimates were calculated based on a 5-year DCF EBITDA exit valuation method, as well as a 1-year EV over revenue multiple valuation method. These valuation methods require projected multiples to determine the share price. Thus, we use competitors, historical, and present multiples as the basis for our projections and calculations.
Now for some investment risks. First, the dilution of shareholders. Raising capital hurts shareholders in the short term, but long-term prospects are always strengthened. We give consideration to 60+ acquisitions that have proved successful for CRM in the last 20 years. A customer data breach. To avoid this, Salesforce invests in layered encryption, and customers are also much safer allocating their business processes to one software provider versus multiple distributors. And lastly, the entrance of new competitors. We believe Salesforce's high switching costs and their reputation will keep customers reliant on their products.
ESG values. Now, Salesforce has made some value and efforts to be clear and transparent with their ESG information. For environmental sustainability, they show full transparency in the fact that although their recent carbon emissions have increased year over year, the rate of growth is slowing and is much less than the industry average. They also strive for social equity for all. According to the company, they plan to have 50% of all workers be underrepresented groups. And lastly, they operate with integrity. Proof of this comes from the fact that they were named on Ethisphere's 2020 World's Most Ethical Company due to their internal policies, which describes the way that they treat employees and other key global stakeholders. They also have an extensive list of code of conduct rules that all who associate with Salesforce must agree and abide by. So as you can see, CRM has an excellent array of catalysts to help accelerate their business, excellent financials to help them gain market share, and a strong ESG system with deep care for their consumers. And for these reasons, as well as the ones mentioned, we believe Salesforce is a strong investment for the upcoming years. Thank you for your time, judges. We are open to any and all questions.
Great, thank you so much for that. Greg and Deepika, you guys are first up. So Greg, do you have a question for the team today?
Yeah, happy to. First of all, really well done and organized. Thank you for that. Let me see. I have found tech to be incredibly interesting over a long investment career, in part because it's one of the really few industries where most of the segments are dominated by one player. They're sort of winner take all kind of games, unlike consumer categories or consumer retail and so forth. Um, that combined with the fact that a lot of investing requires you to take a point of view on the future, I have found tech to have such dynamism that it is really, really difficult to take a position on the long-term future. My question is twofold. One, what makes you take such a strong position on Salesforce's market positioning, given that others are trying to nip at their heels? Do you think that they have better tech, or is it that they're just so entrenched that users don't want to switch? I want to know a little bit more about the basis of your confidence, number one. And number two, I think you've talked about lots of reasons why you thought that this was a misunderstood and undervalued stock, yet your math tells you that it's a little bit more than a 20% opportunity for return. Tech clearly is capable of much more than that. If it's such a good idea, why is there not more upside? And is this the right and appropriate amount of risk to take for something like a 20% return?
Sure. Thank you for the questions. I'll take the first one about the competitive positioning. So one of the main reasons why they've been staying ahead of their competition, major competitors including Microsoft, Adobe, SAP, these are very big companies, and they're much bigger than Salesforce. But we believe Salesforce has been able to stay ahead for so many years because of their diversity in their product set, right? We mentioned in one of our theses actually where they might hook a customer with one of their most popular products, such as sales or commerce or marketing. And once they bring them in, they can begin to integrate them into their ecosystem. And eventually they build customer reliance to the point that it's too expensive to switch out. And that's ultimately their locked in factor that we believe keeps consumers in.
Yeah, and for the second part of the question, in terms of the risk reward, so we mentioned the fact that we believe 1 year of holding would be the best possible scenario. And after that, it's a little bit of personal caution. So Salesforce being a digital company with a product and software, things can obviously change very quickly, and pure numbers will not show their pure growth. Looking 5 years out for a company as market dominating as this one is possible, but the estimates can be greatly varied. You see that in the big tech players like something like Tesla, which has either $3,000 price targets or $10 targets. So they can release new products or new services, which also won't require any manufacturing. This saves quite a bit of time. So for the retail investor, it is a little bit difficult to see how much they'll grow past a couple of years. But after the first initial year, we say that assuming the pandemic is still in effect, it will grow through this because people are at home. People need a good way to communicate with their customers as well as their internal controls. So for 1 year at least, we do see a large amount of growth. And after that, it's more of, if nothing else has changed in their business model, then our 5-year estimate is reliable.
Great. Deepika, did you have a question for the team?
Sure, yeah, I would echo Greg in saying this was a fantastic presentation. I think as you were going through it, I was coming up with questions and then you answered them in the next slide. So really good job. I guess my question and comments are more around, what you just mentioned about time horizon. So when you're thinking about investing, what your time horizon is really important. Are you looking at the next 3 months, the next 6 months, or the next year? And I think the story that you laid out here is a very good case for building a more secular trend in the sector that you're looking at, as well as Salesforce as a company and its positioning. But I'm a little bit skeptical still about the 1 year time horizon. Did you consider kind of the risks, the short-term risks that could occur, whether it's macro or micro or specific to the sector, or even I know you mentioned something specific to the company around the acquisition, but I'm looking for something kind of more broader. So did you consider kind of macro risks that could lead you to change your outlook and convert from a buy to a sell rating within the year?
So one of the major risks coming up, at least, or we feel that obviously we talked about that the company is undervalued. And one of the main reasons for this is because of exposure. Now, during the pandemic, people have started looking at mobile CRMs and started implementing them into their business. But before the pandemic, it wasn't really looked at, and it was a very niche market. So what we believe is that now there are vaccines that are coming out, and people are getting them. They're starting to open up into different phases. So we believe that if people start going back into work, and if people start straying away from the stay-at-home mentality, then that could have a negative impact on Salesforce. Of course, there's a lot of other factors that come into play, because we do believe that the exposure they've gone from the pandemic should be able to outlast this the vaccine rollout. However, if that's not the case, then that might be something to look out as people start going back into work.
Right. I'd also like to add one more thing about the time horizon and the holding period. So we've been seeing a lot of volatility in the last few months. Our price was actually March 25th, which is 2 months ago, and it's already May, and it's already around $230, and it swung a lot. It went from $230 back to 200 and back up now. We're seeing a lot of this action, and we believe it's a lot surrounding earnings season. Every time earnings come out, like, even though they top expectations, there could always be some short-term action, and you always have to see past this and see in a year, we see confidence from institutions, right? Since 2019, they've been holding like 80% of the shares of CRM, which is much higher than previous years. And this company has been around since 1999. So that's a lot of confidence we've been seeing, and they've been holding that for the last 2 years. So yeah, although there is volatility, we do still see the uptrend, and we have confidence in it.